Happy Monday, everybody. Welcome to the Flow Show. A new week begins. Racing through January already. Morning, Kay. Morning, Stel.
Morning, guys.
Hello.
Good
Happy
weekend, all.
Monday, happy week. Yeah, nice and the cold is coming here finally, slowly.
Yeah, same here. We've got snow due apparently again, so there should be fun and games. The world will stop as usual.
Yeah, the district line, I guess.
all of it, mate. A couple of flakes of snow and that's it. The end of the world is nigh. You'll get a bit of that when you're over in Feb, mate. You'll learn all about that.
Yeah, I can't wait.
Bit of a quiet morning actually. Overnight, not any huge news going around, though we have seen some moves in the dollar this morning. So we'll start off with a bit of data. Japanese PPI was up year on year to 10.2% versus 9.5% expected and 9.3% prior. Let's just have a quick look at that on the calendar while we're here. Just you can see those numbers there. So inflationary pressures still there in producer prices. That's keeping the ball rolling and the cauldron bubbling into the Bank of Japan meeting coming up this week. That's early hours of Wednesday, if I've got my calendars right this time. That's right, isn't it, Kate? Early hours of Wednesday? Yeah.
Somewhere around 3 a.m. GMT.
Yeah, whenever they drop it. There's no real set time for the Bank of Japan. And the market can get a little bit jumpy if the longer it goes on. It's said to maybe mean that they're discussing something important, depending on when they release the stuff. So that's something to watch out for. No doubt Kay's will be staying up for it. I haven't decided yet whether I'm getting up for it. We shall see what happens. Depends what's on the telly the night before, really. Kay, you'll be up for it though, won't you, mate?
Yeah, I guess so, yeah, as I do usually.
Yeah. Now, also in Japanese press, economists' views given to Reuters say that the BOJ's Amamiya is the top candidate to replace Kuroda, but tightening this week seems unlikely. So that's Reuters getting a view from economist Amamiya. They say is the likely candidate to take over. I'm not too sure how many are going to be in the running. Do you know how it works, Kay? Do people put themselves forward, or do the bank or do the government approach?
Yeah, usually the government approaches people or candidates can show their interest, and then the government makes a short list and then makes the decision, the final decision at some point. I guess the week before. Kuroda should step down. Latest we should know who replaces him. I recall one of our chief economists at the bank where I was working has been a candidate a couple of times, or nominated even a couple of times, but he knew like about a week or two before the event whether he was going to be nominated for a post at a job at the Bank of Japan. So they could take it into literally the week before. But looking at how the markets react, perhaps this time we are going to know it relatively early.
Yeah, and there's always no doubt we'll get the odd leak or something falling out somewhere along the line. But that's all to go under. I'll see if I can knock up a list of possible contenders just the market are looking at. Might be something we can just keep on a post-it note on our PCs, just to keep an eye on that, because the market probably will trade, whether the new governor is going to be hawkish, dovish, what the slant's going to be. So it is going to be very important to keep an eye on that side of things as well. Speaking of the main man, Kuroda, he's now apparently set to turn up to the Davos World Economic Forum shindig going on this week. Old history for him, isn't it, Kay, at this one? Could we get a bombshell again?
Well, seeing that we have the Bank of Japan results out right on the day, where he's supposed to travel to Davos, I don't think there should be any shoppers at Davos this time. Yeah, we all recall 2016 when he announced YCC with a gigantic. He was laughing his brains out that day, and we all thought he was actually drunk when he announced the YCC. But I don't think we're in for such a shocker this time.
No. But you never say never for these things. I'm going to drop the link to that page in there. It's a bit of a go through to try and dig out who's doing what, but you can see the session highlights down below, and you'd have to read through to see who's appearing at what point. I couldn't see Kuroda on a quick glance through, so I don't know where he's being added into. Lagarde is speaking on one of these things. I can't remember where it is now. Quite some way down, I think it was. Oh, where was it? There we go. On the global economic outlook, that's on Friday. So not too many big hitters I can see at the moment, but they can turn up as and when. As we've just seen today, Kuroda only just announced, so we'll have to see if any others get put on the list for that one. But that's Davos all this week, so lots of boring headlines to come from that, no doubt. Back to some of the other headlines. French Finance Minister Le Maire said that France will raise their regulated savings rate to 3% from 2%. So this is a savings, a sort of public savings scheme, has an interest rate attached, and they're bumping it up by 100 basis points. The flip side that we sometimes forget from higher interest rates is that savers have been absolutely creamed over the last few years because they've had next to zero rates savings. Now rates are going up. It's going to be a little bit of a boost for those that save. It can lead to a bit of higher spending because now people are actually earning a bit more money on their accounts. They can take a bit out and do a bit more spending. So it's the other side of the coin to interest rates rising that we have to look at moving forward, but that's going to be going up across the board. Germany apparently fell to the bottom rung of an investment ranking survey based on energy costs and other things. This was a survey run by the Zoo Economic Institute, who rank countries and their investability, and Germany's right down the bottom on that front. So not good news for Germany there. A Bloomberg economist piece said that ECB interest rates are seen hitting a peak of 3.25% before being cut in July. So no holding back there. They see economists see rates getting 3.25% this year and then immediately being cut in the second part of the year. I'm not sure that's likely to happen. ECB are all but saying they're going to follow the Fed in getting rates up and holding them up for an indefinite period. Just looking back on Friday's data, wasn't a lot out last week, and perhaps the main data point was the University of Michigan survey, which pretty much surprised everyone by coming in fairly strong. In real terms, if you look at it overall, it was pretty much a soft landing report. We saw consumer sentiment jumping 64.6, well up from 59.7. Current conditions and a big jump there, up to 68.6. This report had been under a bit of a dip, or had been trending a bit lower. So this might just be a dead cat bounce. But just when you think that all the data is pointing one way, is consumer sentiment to saying that things may have ceased being as bad as they have got. But the important numbers, the inflation numbers, up on the 5-year and down on the 1 year. Where was the 1 year? There we go, down to 4% from 4.4%. So again, as I say, it looks like soft landing type data where inflation is coming back, but the consumer isn't looking too worried overall. What did you make of that data, Stel, on Friday? Was it sort of bucking the trend of what we've seen in the rest of the economic data?
Yeah, I was a bit surprised, I have to say, because it was good across the board. And I don't know what to make of it, actually. I mean, you're going to get the odd outlier number. I still think the trend is for data to disappoint and to be pointing towards recession, or at least towards some kind of contraction. But this was a surprise. I mean, I don't have an explanation for it. It just was a surprise, and markets didn't really move that much on the back of it. Yeah, I'm not much help. I don't know. I mean, it was surprising for me, but I can't explain it. So I don't know if Kay has any clues, but I'm stumped.
Yeah. Kay, you got any thoughts on that data on Friday?
And I think, and I'm just taking back words that I read online, which I could agree with, is that we have seen energy prices coming off, and the consumer likes it. So I just guess that's what it's reflected in those higher numbers. It's a consumer sentiment index. Perhaps they feel the biggest pain is waning a bit, and that's what the jump is all about. They seem happy with the 1-year inflation expectations coming off. And it just reflects, if inflation comes down, the consumer will be a little more happy on the back of it. And that's also what is likely going to transpire in this week's, what is coming out tomorrow? Is it the zoo or the something out of Germany later this week?
Yeah, we've got the zoo tomorrow.
The zoo, yeah. So I guess the consumer will show a bit of less discontent on the back of lower energy and inflation showing. Can't ever call it a real peak or the end of it, but anyway, I think it's just reflective of that.
Yeah, sure. The White House says it has no position on how high the debt limit should be raised. Just a reminder that this is still bubbling under the surface. The debt ceiling negotiations going on in the US. Is it going to turn into a usual bun fight between the two parties? Will it be a stalemate? Will we get government shutdowns? How long will they last? That sort of thing. So this is a bit sort of like the Brexit Northern Ireland Protocol stuff. It's bubbling.
If I can, sorry, if I can interrupt and just say something. I find it really hilarious, this whole thing, because there's no way the debt ceiling cannot be raised, because if it doesn't get raised, then what happens? They can't issue any more debt, which means what? Default. So this will never happen. So it's all this theater of this against that, and now we might do this, and threats and this. We're going to find the solution. Of course, they're going to find the solution. The path is as follows. Government creates huge deficit. This last year apparently was a big success because it went down from 2.5 trillion to 1.6 trillion. Hooray, we should all be celebrating. So they run this huge deficit. Then how do they finance it? Well, they have to issue debt. The debt ceiling is reached. They raise the debt limit. Then they issue the debt. Then big chunk of that is monetized by the Fed. And then we go back to step one. It's as simple as that, and it's going to keep going. I've always said my global view on things is going to change in terms of asset valuations, in terms of what I like to invest in, what I like to do. This is all going to change when I see countries making, instead of deficits, making surpluses. When they start making surpluses, if that day ever comes, and I'm not talking about Norway who run surpluses. I'm talking about the US, Japan, UK, all those big countries. Then I think we're going to be in a big shift, paradigm shift. At the moment, this is how things work, and this is how they're going to continue to work. So I don't understand why all the theatrics about the debt ceiling, because they're going to raise it in the end. Yes, maybe there's a shutdown. Maybe things get a little bit inconvenient for some people for a few days or weeks, but we know the end game. So sorry to be so cynical, everybody, but it's just I look at all this and I say, but you're going to get to that end point anyway. Why all the theatrics?
Yeah, that's politics for you. And you're 100% right. It is all. It's right to have a cynical view. You know, but it's also important to look at the possible trading aspects from it. There's two things.
Absolutely.
The market can get a bit jittery about shutdowns, even though we've been here before, we've seen it, we've done it. Doesn't sometimes stop the market from, you know, the doom and gloomers coming out and saying this is the end of it and all that sort of stuff. We can see, depending on different headlines, the market reacting to it. But also, if there are government shutdowns, that impacts the data. Data doesn't get released. So that has an effect on what goes on, because then we're bereft of that input, and then it all comes out in a big rush when things are back to normal. So it does, for us trading, it can have a sizable impact, and that's probably the most important thing to take from it, rather than the theatre of politics.
True. By the way, Angela said it's foreplay. I like that. That's cool.
If that's the sort of foreplay that tickles your boat, you're welcome to it. That's, two different parties arguing over how much money they're going to be spending for the next God knows how long. Yeah, if that floats your boat, all yours.
If I'm not mistaken, the last time the US actually run a surplus, and it was a tiny one, was Clinton era. There was 1 year where it was like a tiny surplus. The world was rejoicing. Those were simpler times.
Yeah, that must have been a skew. It must have been a fact in the data there. Someone put a plus instead of a minus. Who knows? Yeah. But then, you know, you talk about surpluses. What happens? You know, not everyone can run surpluses, because for every plus, there's got to be a minus. And you know, when you talk surpluses, if a country has huge surpluses and they can't invest that domestically, they've got to take it elsewhere. You know, a big theme of why, you know, certain countries are looking at buying into big sports teams, you know, big investments in the Premier League, big investments in NFL and that sort of thing, is because countries need to shift the money they've got from these surpluses somewhere. Otherwise, you just build it up, and it does nothing. So everyone's shifting to a surplus. There's always going to be someone who's in a negative balance. And
yeah, that's true.
Surpluses are going to go.
Yeah, I mean, I meant more like not having, you know, $1.5 trillion deficits. You know, having something reasonable. Yeah. You know, small. The other example is, as I said before, Norway. You know, they have a surplus. They have the biggest sovereign wealth fund in the world, which is over $1 trillion now, and they own. Is it? No, actually, no. The S&P owns 10% of Apple or something like that. But they own, you know, I read the other day, I think the Norges Bank, the sovereign wealth fund, owns something like 2% of global equities or something ridiculous like that, or 1%. It was extraordinary. But you know, they diversify. You know, you can buy stuff, like you said, you know, buy football teams or soccer teams.
Yeah. I wish someone would come and buy my team, because we're not doing very well at the moment.
Yeah,
that's a different conversation in itself.
Right, 1.8%. There you go. Thank you.
1.8%. There you go.
There you go.
There's always someone who knows. See, that's what I love about ForexAnalytix and our viewers.
The Norwegians know. They're Norwegians. They know. Yeah.
Right. So let's have a look at the calendar, as you can see on the screen there, just see what's out this week. BOC Business Outlook Survey can sometimes be a mover for the CAD, depending on the numbers there, whether it looks positive or negative. Then we've got tonight out some Chinese data, GDP, industrial production, retail sales. Not many people are looking for these numbers to come out positive, given everything going on with COVID and what's been happening there the last few months. Germany, that's the final CPI number tomorrow. Jobs data from the UK tomorrow could be a bit of a pound mover if it's depending which way it goes. The Zoo survey, as Kay pointed out. And then in the US, we get the Empire State Manufacturing, which is the first manufacturing data of the new month. So that will be closely watched to see if that's flagging any further problems in the sector. Philly Fed is the second print we get. That's coming out on Thursday. More inflation data on Wednesday with PPI, also UK CPI as well. That Eurozone HICP is the final number. But for the UK, that'll be a fresh print, and PPI will add into the inflation pot as well. US retail sales, that's going to be a fairly important number to see how the holiday period has gone for the US. Have they had a strong retail sales in that December period? Adding that into whatever happened in November, just to get an overview of whether the consumer is feeling the pinch or not. Then we get industrial production, business inventories, and the housing market index, the start of the housing data for the month as well. On to Thursday, ECB minutes. Not sure if they're going to give us anything really of note, since we've heard a million times from every ECB member since. Then we have some more housing data with starts and permits. Can be a bit of a funny number coming into the end of the year. Things slow down. Obviously, things break for the holidays and whatnot. So usually these reports for December and January can sometimes be a bit funky. On Thursday, Japanese CPI. Obviously, that's coming after the Bank of Japan. But depending on what happens there, this might add or take away from some of the moves that we've seen there. If the Bank of Japan has done nothing and they're staying their course, no changes to yield curve control, no changes to the outlook and their thoughts on inflation, the market's likely to sell yen. But then if we get a strong CPI report, all the expectations for them tightening are going to come rolling straight back in again. So that's potentially going to be a big number to watch there. Friday, UK retails, German PPI, Canadian retails, and more housing data from the US. And that finishes us off the week. On Friday, right, let's take a little gander at what's been going on in prices. And just to remind that a lot of the US is off today. We do have Face and the Morning Edge coming up later. No rest for the wicked for those guys. They'll be in doing their thing. But stocks and bond markets are closed today, so it should potentially be a little bit quieter into the afternoon. So taking a look at dollar yen first, and a pretty strong bounce off of fib level that we've been looking at for quite some time, as you can see there. The 50 fib, the big move up from 102 at 127.27, almost to the pip. We hit that and we've bounced from there. I'm not too sure why we've bounced and why the dollar is so strong. I was expecting yen pairs to maybe rally a bit, just on the back of some squaring and taking positions off the table ahead of the Bank of Japan. This has been largely a dollar move. Now what it's done, it's gone from pillar to post really. It's hit one fib, bounced, and it's hit the resistance area that we saw last week against an old fib in that 129 area. The fact it hasn't gone further than that and is now sort of creeping lower suggests perhaps I'm just positioning overnight, knocking out some stops of the prior low, making a prior low, and then rushing back up again. You got any idea on this, Kay? This move we saw this morning, is there anything I've missed in the headlines?
No, I think it's exactly how you mentioned it. We already had shown this this 127.35.50 zone. I think a bit of positioning, perhaps the reaction as well to when the article came out about Amamiya being the most likely successor. But we already, I mean, there's nothing really new in there. But yeah, the market being volatile as it is in the yen, I think it's just a reaction to it. And we've seen on speculation that Bank of Japan may do something, and stress on in the bond market. We've seen moves of 400 or 500 points. Now we've done 150 to the top side, hanging around in the middle somewhere now. And yeah, let's wait for the Bank of Japan. I think perhaps if we revisit the 127.35 max, 126.5 somewhere, it's going to be more than enough into the Bank of Japan. That's what I think anyway. And then we'll see what they do. No, I think that, yeah, it's just a dollar move, and then the yen being perhaps a little stretched in positioning. No fresh, perhaps dollar Japanese bonds selling, or not too much overnight. And it's just a combination of a bit of correction, you know.
Yeah, no, I think so. I think so. I'm still short in this pair and happy to stay short and add to shorts. But I'm not going to be looking at doing anything in between the levels here, because I think we're going to probably tread some water for the Bank of Japan. But I'll see what happens if we get a decent rally up on an unchanged, do nothing Bank of Japan. You know, we could probably see it back up to 130s, 131s, maybe at a push back up to 132s. Anywhere up to 133s is probably going to be a gift, because the market isn't going to drop the bone on this, even if the Bank of Japan is unchanged and admitting or reaffirming that they're going to keep pumping. The market is smelling that they're going to be having to do something. They already have by doing the yield curve control change. As much as they've said it's not monetary policy, yields are still under pressure there. Market's still pushing to the top end and knocking the yields above 0.5%, the top of the band, and causing the Bank of Japan to react to it. So it's not going to go away over one meeting. So if we do get a decent rally in dollar yen, I'm going to be looking to hit that once again and see where it goes for the downside. For a lot of the other pairs, as you know, Aussie dollar, I'm in as well. That had a little break above 70. Again, you know, maybe just the time of day, low liquidity, managed to get through the 70 level, take out any stops. We couldn't get above 70.20. It really needs to clear 70.20, 70.30 before it looks like a real proper break. Bit like what we had down at this 69 area, where we were getting up to 68.80s and then, you know, a little mooch above 69, couldn't hold it down below. Maybe we get a similar sort of pattern up here. I would expect 70 to be a bit more resistant during today, at least, purely because there's more liquidity now. So that's going to be the resistance area again into that 70 handle. But conversely, we might have just cracked the egg, knocked a load of stops out and whatnot there. So it may be a bit easier moving through. The dip so far, you know, typical. Comes in at 20 last week, coming in at 40 this week, so plenty of the 20s gain. It's not looking like it really wants to crap out at the moment. While we're maintaining this break above 69 and keeping above this 69, 15, 20 area, that does keep this part of the break in play, and we'll see what it wants to do from here on out. I did actually manage to make some money on the first time short last week when we got up to this area here. Managed to run it all pretty much all the way down to the lows before getting tripped on the trailer around 69.50. I'm still long a bit more from 68.74 from last week as well, adding to my core long. So I'm going to stick those in the slow cooker and see if we can get a bigger move above this 70 area for now. But if we get under 69.20, 15, 69, then maybe we're in for a bit of a dip lower. This is once again my most important support point down here. If we crack that, it's potentially we're going to head much lower from there. Kay, do you want to take a little quick look around?
Yeah, if you want to. I don't have much new to show today, really.
No, neither do I, which is why I'm passing it over to you.
Yeah, no problem, mate. Okay, let's perhaps have a look then at the yen going into the Bank of Japan week. So, yes, you guys see my screen, yeah.
Yep.
So this is this really longer term, the weekly longer term. What is that, triangle or so, wedge? I don't know how people call that. I'm not. I don't have a technical dictionary. Anyway, this line comes in around 127.5, and then we have this the latest run up in dollar yen from I've always calling this the Fed pivot level, right? When the Fed came out, Powell first, and dollar yen started to shoot. So the we've got the 50% of that at 127.35, and that's where we stopped. So if we would take the whole move, the pandemic move included, that level would be 126.60. So that's going to be, if ever we trade below 127, those lows, 126.60 is another one to watch. And if you want to know where the Japanese will likely look at the top end of this move, and that's going to come in for when the Bank of Japan meets this week. The top of the cloud comes in just around 130. It's 129.95. So I think that's going to be another level that the Japanese are going to look at. Watch out for reactions. If we would get a move in the dollar yen up there, watch out for those reactions up there. It's also 130.5 is going to be a level to watch, I think. So keep an eye on what happens around 130, 130.5 if we get the reaction on a Bank of Japan, if in case they don't do anything. If they would do anything, well then the world is wide open, I guess. Well, depending on what they do. So there's a couple of possibilities. They could just widen the band, for instance, go from -0.5% to +1%. They could just shift the band up 0.5% or so. That would mean that they declare the end of negative interest rate policy, because then they will probably hike the rate by 0.1 to 0, and then have the JGB band 0 to 1%. And then they could, what Citi thinks they might do, which I think is a bit utopia, but they could just abandon YCC, and then we probably just shut our screens and run for the exit. Because that would really create a gigantic mess in the markets, I reckon. So I think I give that less than 1% chance personally, that they just abandon yield curve control. Let's not forget as well what we've been talking about many times, that the Japanese government has put in place massive stimulus packages, and just abandoning YCC would leave them completely out in the cold, needing to borrow money for that. And the market will, I don't know where the market will put rates if Bank of Japan abandons YCC. They can abandon YCC eventually and possibly and say we're still going to continue to buy bonds to try to control the market, a little bit like what the Bank of England did. But remember what happened when the Bank of England, they didn't even do anything about monetary policy, but when the government came in and Truss and Kwarteng sent the sterling into a spiral in the bond markets as well. So I don't think that is a possibility personally. But there are your levels on the dollar yen. And perhaps we should have a little look at what happens in some of the yen crosses. I think I'm going to need to clean my stuff up a little bit here. It's already making it a little bit clearer. This together with other pairs, this euro yen has been in a downward channel as well. But I find that we are seeing buyers coming in on around those low levels in the 137 zone. We're still not miles away. We are trading just around 139 the figure, but for post BOJ or going into the BOJ, if we get a retest here and it holds again, be a bit mindful of this level, and that's low 137s in the euro, and I think it's going to be an important level going forward. On the way back up, we are going to find a bit of resistance, I think, between 139.60 and 140. I think 140 is round enough number to pay attention to for the once the Bank of Japan is done. We could see a move back through it if they keep everything as it is, and depending on what Kuroda is going to say about their decision, there could be a bit of a move back up, perhaps to 141 somewhere. The one that is interesting too then is, first of all, the Aussie yen. We tried to get back into this channel but failed, and now we're forming another channel where we respected the top on Thursday and Friday, the top line. Now we are trying to make a move back down. I think it's probably part of what's happening just in Aussie and possibly Kiwi as well, is people trading those crosses. Aussie yen is the second pair, or the second Aussie is the second currency after the dollar that Mr. and Mrs. Watanabe and Sons are playing in. So it's always worth keeping an eye on what's happening in Aussie yen to know what the Japanese retailers are thinking and doing. A bit similar on the Kiwi yen. We've broken through here, but we seem to hold the underside of this channel here, and that's been going on. It's quite a medium term, so it's been starting to build from April, May last year. And that's a pretty decent channel with some decent percentage moves there. So keep an eye on what's happening on a close, 81.40 and give it down to 80.90. This zone here, I think, should be relatively important on the Kiwi yen going into the Bank of Japan as well. If it holds, why not see a move back into the 83s, for instance, for a starter. Other stuff, cable, not much. It's still doing this yo-yo, still having trouble. We had this run up again in the Asian zone. Asia Monday mornings are always doing some outside move, and it's been rejected once more. We haven't managed to make it down to 120, 140 on the cable, but this is still a bit of a yo-yo in my opinion, and just trading around. I would watch again what happens around 122, perhaps even 40, 122.70 downside. The day's low 121.70, 121.40. But I don't think that today we are going to make a lot of hay. Euro sterling, same. We're still struggling to break or to go and have a look at this 89.15.20, which is to me the next big level. Downside, we're not going anywhere, right? We're hanging around in the mid to high 88s. There's a bit of talks going on about this Northern Irish protocol. I would have thought it would have supported sterling just a little bit. I was waiting for it to see if we'd have a better chance to get some euro sterling back lower, but the market is not really trading it. And then this morning, Aussie Kiwi, China injected a bit of liquidity overnight. They left the 1 year, I think, rate unchanged. There's been a bit of a correction in the dollar China. There's a bit of correction going on in copper, and the Aussie is trading a bit lower from that break above 70. As a result, Aussie Kiwi came back as well to test this 108.80.85 again. It's still the level that I think we should watch on the short term. I'm waiting to see if we can get it back into lower 108s, 107.75 to reload. But if it holds already 108.80.85, it's gonna be probably having a look sooner or later at 109.80, 110.30 perhaps. Metals, silver, still the same. Again, we were trying to get through that red line and failed again this morning. We are now trading 24.20. It's not really correcting much, but I would still look at this 24.5, 24.55 or so to see if silver can make the break and go for it. It did a little bit of catch up on what was happening in gold, and I think that may be having to do with those better sentiment data. I think silver will thrive more if sentiment in the markets is better. Gold is more of the still the China trade, I think. So we have to look at what happens around 1900 if we see a correction. If we don't get any corrections, I know people have levels around 1930, 35, and I don't personally have one, but I think Blake has a level up there. But for as long as 1900 holds, we can't rule out another rally here. And lastly, quick little look. Yeah, we had this move down again, as we've been talking about on the flow show and on phase down to the low 340s in the 10s, and now we are back at 350. Pretty neutral around here. So we are going to have to see if we can start to make a bit of corrective or a bit of better moves back with better sentiment, but we'll have to look at the data for this, in my opinion. The twos back above 420. What Ryan also was showing the other day for 418, 420. We're back above, but we are hanging around, and I wouldn't really make too much of this. We have a few Fed speakers later in the week, so they may influence it and a couple of data. And with that, Ryan, for today, I'm going to give it back to you.
Thank you very much, mate. Always a pleasure, as always. I just want to have a quick look as well at euro dollar. Just this zone been looking at. I tried catching the knife into the big figure on Friday. I had my stop at 107.85. Low came in at 80, of course. But we're still not breaking above here, and it's still rejecting quite well. So there is some decent pips to be made selling into this area. We have tried a few times though in quick succession. So I don't like a price that knocks on the door too many times. But for the moment, as Brand said about looking at the Aussie dollar, we are doing the stair stepping up on the 20s, 80s, 00s, where the support's coming in. So this zone is, I think, yet to be resolved. What we do up here, are we going to get a proper breakthrough, or is time going to tell? And after too many attempts and failures, we're going to see a steeper pullback. That's what we'll be looking for to see if that happens, how far it may go back to. Likely, if we're back under 108s, we're looking at a move to at least the low 107s if that happens. But still waiting to see what happens with the zone up here. I'm not inclined to trade it too much around, except maybe sniping off the levels. I don't have a real view at the moment for euro dollar. I'd rather play through euro sterling because I think that's still got some legs to go in what happens here to the upside. A move through 89 should kick us on to 90 pretty quickly from that. 88, 70, 80 area, again, while it's quiet, is being the zone or the level that's resisting. We can't hold a move above it, and that could become significant because what it does do, it sets up the potential for a more volatile break if we do get one. Conversely, the longer we go without getting a proper break, sometimes the market can give up a bit, and then we'll get a dip down to maybe 88 and some of these lower levels in the 87s. So that's oh, sorry, mate.
That would be nice if they give up. If they give up a little bit, that give us the occasion to reload a few.
Yeah, definitely, mate. Definitely, I'll be looking to do that as well on the same bus as you guys. I'm still holding a small bit along from. Well, that was the ECB trade. I jumped on while we were on face in 87.24, 86.24. Can't remember now. 86.24, I think it was. When we got the leg up over the guard. Yeah, and like Stelios, I'm still bullish this pair, so looking for it to run higher. On that note, I think we'll call it a day for today, just to ease ourselves into the week. As always, if you've got anything you want us to talk about, then please pop it in the comments. We're happy to look at it. Take a look at something in greater detail if need be. On we go this week. I wish you all the best of luck. Many pips to you all. As always, thanks to Kay, thanks to Stel, and we shall see you all tomorrow. Thank you very much.
Good day, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.